Hello guys, this is Oba FX Trading Academy and welcome once more to my YouTube channel. So today I'm going to be doing something for those who trade the Deriv synthetic indices as part of our series of top-down analysis. As you all know, here we use strictly pure price action strategy. We do not rely on indicators. We look at the relationship between the buyers and sellers as well as price to see if we can predict what the market will be doing in the nearest future or the probability of it doing so. So this morning I'll be looking at the volatility 25-1x. And to start our analysis, let me quickly take what I have here initially off. Now, this is one of the very, very volatile index, Deriv Volatility 25-1x. Now, on the daily time frame, but as you all know, we like to start our analysis either from the monthly or the weekly time frame. So from the monthly time frame, what can we see? Now, this is quite obvious that this index has been on a bullish run for a very long time and is still much more there. Now, how do we mean? Now, just for those of us that do not know how we got to that conclusion, we can see that this index ranged for a while. Now, when we say something is ranging, it means it is moving between a support and it is moving between a resistance and a support. So even on the monthly time frame, you can see this happened for a long time, and then price finally broke out of this zone and scaled upwards. So finally formed a higher high rather, then came back to form a higher low. Did a double top here, made a double top here, but the activities of sellers wasn't enough to push it downwards in order to obey the rule of trading double top. In other words, double top, as we all know, is a bearish reversal pattern, but that didn't happen to stop the market from continuing in the upward direction. Instead, the market broke through the upward resistance, and since then it has been going up. So our conclusion from our monthly time frame, where mostly the function is for us to get the general direction of the market, is that volatility 25-1x is in an uptrend, and rightly so. Why? Because it is making a series of higher highs and higher lows. So let's go to our weekly time frame to see if we have a potent structure to work around, or to see if it will tell us something contrary to what we've just seen on the monthly time frame. Now, how do we do this? We go to the weekly time frame. Let's zoom out. Now, from the weekly time frame, we can try to take note of key levels. Now, we say that key levels are zones that are rejection zones, zones where prices have been rejected severally, and that these key levels, when we find trading opportunities there, there's usually a very high probability of us, if entries are well taken, of making profits. Now, the most obvious zone to me would be this zone. Now, why this zone? Now, each candlestick here on the weekly time frame represents 1 week. That means it takes 1 week for every candle here to form. So you can see that each time price got to this zone, it was rejected for several weeks. And then finally, price broke through the zone. And this makes this zone very, very important. And also, we can see that it was just recently that price was able to break through the zone, and then price is doing its thing above the zone. So this zone served as a resistance for a very long time, opposing price movement upwards. And now we'll be expecting that because it served as a resistance for several weeks, we'll be expecting that if price should at any point in time come back into this zone, we'll be expecting that this zone should act as what? A support. Now, as we all know that there are three basic tools that I use when it comes to doing a top-down analysis of any market, and that's a support or a resistance zone, a trend line. As we have seen from the monthly time frame, the market is trending upwards. So if I'm to place this here, so this will be my what? My trend line. And then of course we know the last tool is usually the Fibonacci retracement tool. So for all these, we put them together to create a confluence to enhance our chances of getting profitable trades. So now we've gotten a zone here. So if I'm to get another most recent one, I would say this, because just as the upper part of this acted as resistance, stopping price from going upwards for several weeks, this lower part, this lower zone also stops price from going downwards. So in other words, this acted as what? As a support, while this acted as what? A resistance for a very long time. So if I'm to add a third most recent zone, which might take a lot of time for price to get to be this rejection zone here. So price was rejected from here twice, and then we can see also that price was rejected from this place, and also for 1 to 3 weeks, price was rejected from this zone. So without making the chart look cumbersome, let's go to the daily time frame to see if we can get a structure now to work around. So on the daily time frame, I'll zoom in. I can see that there's an opportunity for me to add an internal trend line. I'm sure those of you that are not, if you're not new to this channel, you know how important this is. Now, this is because price would likely get to this first and react to this trend line first before maybe probably coming to make a third touch of this outer trend line. So if we are going to be dealing with recency, then this trend line becomes more important than the initial one that we've drawn. Now, seeing that there was an aggressive movement of price, so when price made this first touch of this trend line, made another touch, it came back here. Just most recently, there was an aggressive movement of price from this trend line. Then we have an opportunity to impute our Fibonacci tool. So if I'm to do that, place this here, and voila. Now, we all know that the most important part of our Fibonacci retracement tool is usually what I call the Fibonacci retracement golden zone. Now, how do I mean? I mean this. Where do I mean? And that's the zone between the what? The 50% and 61.8% zone. Now, I said the reason is that for 95% of the time, each time price retraces into the zone, even without making a touch of the trend line, it tends to go back to its initial direction. Now, we've succeeded in adding our basic tools that I use in doing a top-down analysis. First, we had the trend line telling us the direction of the market. When we came back to the daily, we came down to the daily time frame, we're able to impute another internal trend line for recency. And then we have like a very strong resistance zone now acting as what? A support, or we're hoping it will act as a support. And then we had our Fibonacci retracement too. Now, one thing that we should note is that the very strong resistance turn support zone is very close to, most times they get to align, it's very close to our what? Our Fibonacci retracement golden zone. Now, what this would be telling me would be that market makers would likely use this zone as what? A place for liquidity grab because of the proximity of the zone. So what do I mean? Price will likely retrace into the zone, play within it a bit, and because the market makers know that a lot of people will be waiting here to take their trades, because this is like a very, very beautiful setup, they might likely push price to come into those major resistance, sorry, rather major support zone to before the market gets towards to move upwards. So the probability of price breaking through these two zones and now coming down to touch this trend line is there, but it's more unlikely than it's just coming here and then going upward. So this is the daily time frame. This is my outlook for volatility 25 1x. So for those that trade in the much lower time frame, might be asking, okay, so what happens to us? Do I take trade on the daily time frame? Of course, you don't take trade on the daily time frame. So how would I approach this market? Honestly, I'll have to wait for price to get here and I see what happens. In other words, I look out for a change in trend in the lower time frame, probably like in the 4 hour or 1 hour time frame, a change in trend. I look out for chart reversal patterns. I can look out for candlestick patterns to see if I would engage the market. So just to summarize what we've seen from our analysis, from the monthly time frame, we saw that the market was in an uptrend. We came to the weekly time frame to pick out zones where we feel would be important to our analysis, and we're able to pick out this very strong initial resistance zone that has just been broken, and we're hoping would act as what is support in the nearest future. And also we're able to put two trend lines, one out here and then a much more recent one. And when we came down to the daily time frame, we're able to add our Fibonacci retracement tool. And we say that in order to engage this market, we need to patiently wait for whatever price is doing here to be exhausted, and the whole price comes back into this Fibonacci retracement golden zone, which is a zone between the 50% and 61.8% mark. And that if when price gets in here, then we can scale to the lower time frame, either the H4 or the H1 time frame, to see what price does in here. That's also because of the proximity of this golden zone to our initial very strong support zone, that price market makers could likely use this as a liquidity zone. And so that means whatever trade we are taking within this place, when that happens, we'll have to be very, very careful in monitoring it. So basically, this is the outlook for volatility 25 1x. So if you're coming across this channel for the first time, I'd like to plead that you hit on the subscribe button so you can get subsequent videos on top-down analysis for both cryptocurrencies, forex currency pair, and Deriv synthetic indices. And also, if this video has been of any value to you, you can combine this with your own analysis and we can both see how the market play out. Please hit on the like button, share and subscribe to my channel. If you also want to learn how to analyze the market masterfully and do top-down analysis like this, or improve your own trading strategy, can always reach out to me and work something out via my WhatsApp line in my bio. Thank you very much for your time and have a wonderful day. Cheers.